This is Bazaar Morning Call, broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Hello and welcome to Bazaar Morning Call. I'm Sonia Shenoy and joining me in the studio as always is Nigel D'Souza and Rima Tendulkar. Well, guys, good morning. A bright new day.
Good morning, yeah.
And looks like it's going to be not a bad one.
Hopefully it's not. Yesterday actually was a decently okay trading session thanks to Reliance Industries. But today I think you'll require the other names as well to perform. Lower dollar, I think that's going to bode well for us.
I think Reliance, Tata Motors, these are stocks that really performed yesterday, right? Hopefully they'll take it forward today as well. But so many cues as we kickstart trade. So let's get straight to that. As we were telling you, it's strong global cues, you'd have to say. So the Dow was up in the green, but I think it's all wait and watch mode because we have a lot of important data coming through in the next couple of days. The inflation data in the US, both CPI and PPI comes out, and those could give us some cues on what the Fed is going to do in the end of July. The expectation this time around is that there will be a rate hike yet again in the Fed policy. So all eyes will be on that. Now, the Nifty, as you know, Nigel was also pointing out, yesterday was a bit of a lackluster day. We consolidated, we came off the day's highs. But there were some pockets that did well. IT was under pressure, but on the flip side, there was Reliance, Tata Motors that performed pretty well. So keep an eye out on those pockets. What the bulls would like is that both foreign and domestic investors bought in the cash markets yesterday. And now it's almost 9,000 crores of buying from FIIs in the month of July alone. So it's a pretty hefty sum that has come through from the foreign investors. The market strength continues. There's no two ways about that. The uptrend is intact, just that there may be a little bit of volatility along the way, especially now that we're getting into the thick of the earnings season or into the main pocket, which is the IT sector. And there the results are not expected to be good, especially with HCL Tech. So perhaps there could be some, trepidation ahead of that. There's TCS, HCL Tech tomorrow, followed by Wipro as well as Federal Bank on Thursday. So a lot of earnings coming through in the next couple of days. Once again, the focus continues to be on the auto stocks, especially after, most of them hitting record highs, Tata Motors, Bajaj Auto. So perhaps there could be some more traction over there. But Rima, barring TCS, or rather barring the IT space, looks like the market seems to be in fine fettle.
It does. It's been in a range of 19,300 to 19,500 for the last 4 or 5 trading sessions. If you could just pull up the day's high and the day's low for the last 4 trading sessions, and you would see that the Nifty high was about 19,523, and on the way down yesterday, the Nifty hit a low of 19,300. So for the last 4 trading sessions, the range has been 19,500 to 19,300, and I guess we're just consolidating, spending time in this range, and for any big move, this range needs to be decisively broken. Another word on the US market. So while the frontline indices had a tepid session, they closed up with gains of about 0.5%. Russell 2000 gained 1.6%. So the small cap index there was the big outperformer. And there were 3 Fed officials who spoke yesterday. They're the non-voting members, but they do participate in the policy meeting. And all 3 of them have indicated that higher interest rates will be needed to curb inflation. We had the Cleveland Fed President Loretta Mester, who said that inflation remains the #1 problem in the U.S. economy. San Francisco Fed President Mary Daly said that Fed will likely need to hike rates a few more times to get inflation fully under control. And you also had the Fed Vice Chair for Supervision, Michael S. Barr, who said a bit of work needs to be done to achieve restrictive rates. Another word, getting back to the Indian markets. Yesterday, in terms of the flows, both the DIIs and the FIs were buyers in the cash market. The numbers are up for you on your screen, but the FI buy figure has been coming down. We highlighted this yesterday. Yesterday it was about 590 crore of cash. The day prior, it was 790 crore of cash. And this is a marked come down from the 1,000 to 2,000 crore of FI buying inflows in the markets that we've been seeing. In terms of cues for the day, as usual, Tuesday. So you've got the FinNifty expiry, and you also have a GST council meeting, which begins at 11 a.m. So we're going to be watching out for developments there. Nigel.
Well, the top points in terms of trade setup today, we have a softer dollar, which is good, and crude oil prices have come off a little bit. So the global cue for me, those 2 are positive. The other factors, yesterday there was some unwinding of positions, both on the Nifty as well as the Nifty Bank. The open interest was down by around 2 to around 3%. Also, there was no fresh shorting, but there was unwinding or lightening of positions getting into this big earnings season. HDFC Limited, well, what a moment it's going to be. Today it plays out its final part in the Nifty Financial Services Index. Remember, HDFC Limited is not part of the Nifty bank. So that plays a bigger role in the Nifty Financial Services Index. And today we have expiry that plays out. So in the current form, it'll be the final time that it'll be playing its role. Let's hope that it plays its role on the upside. Well, let's focus on a couple of other cues then. The FIs in the FNO market, well, they lightened their positions. As I said, there was some unwinding of positions. You had the premium that's come down from around 100 points to around 50 points out. So there was unwinding of positions both on the long as well as on the short side. On the index option side, they bought some puts, close to 12,000 put contracts, but they continue to write more calls than puts. And yesterday as well, it was in the ratio of 2 calls for 1 put. But today, it's the Nifty Financial Services Index. So that takes center stage, particularly in the second half of trade. The 20,100 call and the 20,000 put, both of them were fairly active in yesterday's trading session, which brings us to the broad range, the 200-point range, 19,970 on the downside. On the upside, 20,150. That's the broad range that, in terms of position. So that's about the Nifty Financial Services Index. On the Nifty, on the options side, well, you have the 19,350 put out. There was mixed amount of activity out there, but it appears there was some writing as well. So given that the premium out there was around 70 rupees odd, you deduct that 70 rupees from around the 19,350 odd mark and you get your stop loss for the day. So 19,275 becomes the important level to look at on the downside. And given that there was unwinding at 19,400 call, those call writers, they are moving out. Yesterday's high was 19,435, so that becomes a bit of a resistance zone. Now this morning, the GIFT Nifty is suggesting a gap up. I think that you shouldn't be going ahead and jumping in to buy the gap up. You wait for an intraday dip. You count on that 19,275 level odd holding out. Stay long on the index, keep that as the stop loss, and hope to get past yesterday's high, which was 19,435.
Okay, fair enough. The Dow futures also quiet, just in wait and watch, tentative mode ahead of that key inflation data. So maybe you don't want to take any big bets either way. But we have lots to talk about on the show in the next 2.5 hours. So without wasting any time, let me tell you what's lined up in the first half hour of the show. We'll get you updates from the market across the globe. Dean Kim of William O'Neill and company will be joining in to discuss the global trade setup. Later, our research team will bring you CNBC TV18's list of top 10 stocks for the day. At around 8:30, we'll do a fundamental stock analysis. Ajay Bodke is our guest of the day. But first up, let me start with some equity views. Rhythm Desai of Morgan Stanley says the improving EBITDA margins are likely to lead to earnings growth in Q1 as India continues to be in the midst of an earnings upcycle. They are buyers of financials, consumer discretionaries and industrials going into the earnings season while avoiding external-facing sectors.
We have another opinion coming in from Surendra Goyal of Citi. Citi says they expect a 16% year-on-year EBITDA growth for the companies under their coverage and an 11% growth for the Nifty companies ex-OMCs. Earnings growth is expected to be significantly higher. They say EBITDA growth year-on-year is broad-based across financials, autos and industrials, but weak in energy ex-OMCs and metals. Going forward, earnings revision will be the key to watch given the sharp rally in the market over the past few months. Citi's June 2024 Nifty target is 19,800. They suggest buying the dips.
Well, let's get you some money market views then. Abhishek Goenka of IFA Global says that the rupee was the worst performing Asian currency last week, weakening from around 81.80 to around 82.70. He says that the hawkish Fed minutes, strong US jobs report and better than expected US services PMI have made a 25 basis point hike by the Fed in July almost a certainty. He says up move in US rates has pushed down forwards even lower, which is not helping the rupee either. He adds that key data this week from an overall dollar direction perspective would be the US June CPI print due tomorrow. He expects the rupee to continue trading in a range of around 81.60 to around 82.90 over the medium term.
Okay, 82.90, that's the upper end of the range. On the bonds, he says that tracking the overnight fall in US yields, they expect the market to ease here and remain range bound. He talks about how the inflation print tomorrow is likely to be a bit higher for the next 2 months, but within the tolerance band. He adds, with no major domestic cues, expect the 10-year benchmark bond yield to trade in a range of 7.11 to 7.16%.
And we have lots of stock-specific action to track today, and we'll get to it in just a bit in our special Top 10 segment. We're going to be looking at Car Trade Tech, Nazara Tech, Tata Communications, Mazgaon Dock Shipbuilders, McLeod Russell, PCBL, Sangvi Movers, APL Apollo Tubes. These are on our radar on the back of positive news flow. And chemical sector and Vedanta are the stocks on our radar that are likely to open in the red.